Yo, what's good, y'all? So today I'm gonna be breaking down a trade I took today that netted me about $300 in the NASDAQ. So let's kind of get straight into it. So going into this week, the week of December the 2nd, you can see here I'm on the weekly chart. On my screen, I have the NASDAQ pulled up on the left and the S&P pulled up on the right. So going into this week, today's Tuesday, but going into this week, we had this buy side liquidity here that has not yet been taken out. So I'm going to go ahead and mark that. Buy side liquidity at here. This is the all-time high liquidity on the NASDAQ at 21,340.75. And on the ES, on the S&P, that same liquidity had been taken out last week. So the all-time high liquidity was taken out last week. So going into this week, the S&P was already trading at all-time highs while the NASDAQ still had a little bit more room to go. So yesterday, Monday, was an extremely bullish day. So I'll go to the daily chart just so y'all can see that on both of these assets. Yesterday was extremely bullish. We ripped about 200 points on the NASDAQ, and S&P didn't go far. But again, we're trading at all-time highs already on the S&P, so it's going to be a little more difficult to trade the S&P right now. But the NASDAQ had a clear draw on liquidity on Monday going into the week, right? Like, it's been a very clear draw on liquidity. We inverted this. Actually, let me adjust this here. We inverted this sell side imbalance, buy side inefficiency that we had here. So this SIBI, we inverted on Monday, but we had pushed already above it last week. So, you know, we were definitely going to draw higher. So I knew our draw on liquidity was all-time high liquidity going into this week. So I've been pretty bullish all week long. We're also coming off of this order block here. So there's a bunch of reasons for me to be bullish. We held this order block, inverted this SIBI, and now the next draw was all-time high liquidity. So going into today, again, I was very bullish, Tuesday, December 3rd. And so let's kind of go down to a 1-hour chart and look at what we had. So like I said, we inverted this imbalance here yesterday, so we can get that off our charts. But we did form here a 1-hour buy side imbalance, sell side inefficiency yesterday in the afternoon or in the morning on the NASDAQ. So going to the hourly chart here, also had a similar situation here on this same, where is it at? This same imbalance at 9 a.m. yesterday was not formed on the S&P, but the S&P did retrace back into a 1-hour buy side imbalance here that was formed earlier in the morning on Monday, yesterday morning. So I knew I was potentially waiting to watch for the NASDAQ to retrace into this range or into this imbalance in order to look for a long position. Also, if we look here on the NASDAQ daily chart, you can see before we got to the all-time high liquidity up here, which is that same one I marked. Before we got there, we also had some minor internal buy-side liquidity to get through here. So that was a good target initially. But I'll tell you what I was targeting on this trade. So going into the day, we had these London highs that were forming some buy-side liquidity here. So that wasn't quite my target, but I'll show you here. But we also had these highs from, we also had this high from 8 a.m., which was forming, that was formed. If we go to the minute chart, it was this high here that formed right when we dropped at about 9 o'clock. We dropped, so that formed some buy-side liquidity up here. That was a good target for me. So going into the day, when the market opened, we traded down. See, we traded down here into this 1-hour imbalance, which I have marked here. It's the same thing, this rectangle here. 1 hour buy side imbalance, sell side inefficiency, So NASDAQ traded into this. And as we traded down into here, I was waiting to potentially see some sort of change in state and delivery or order block form. So when we traded down into here right at 9:30, then I was potentially watching to see some speed back up in an order block form. So this down close candle, this opening price down close candle formed an order block. So that is one thing that happens pretty frequently. The opening price a lot of times is always a strong PD array to play off of. And in this case, it happened to form an order block as well on the 1 minute. So I was when this candle closed 9:32, once that closed above here, that automatically validated this down close candle as an order block. So I was watching for price to trade back into here. And then as soon as we wicked back up here, I bought 5 micro NASDAQ contracts along here at 2160.25, as you can see here. So I got in right about here. And at that point, it was just about being patient and letting the trade play out. So I can kind of show you what happened. As we got in, price traded up higher, and then we formed this imbalance here, which validated a change in state and delivery. We had a buy side imbalance, sell side inefficiency form on the 1 minute chart, and we traded back into that here. And you can see the bodies never closed below this. So this was a great indication that we were going to continue higher. And then off of that, we formed another order block here, which is this 937 down close candle. You can see delineated here. And we retraced back into the mean threshold of this down close candle here. And that's what, I was kind of watching for to see if we held that. So we held that. And then we formed another order block, or in this case, a proportion block. These series of down close candles here, these 3 candles were in a proportion block that essentially should serve as a mechanism to boost price higher, or some sort of support to hold price. So you could see we closed above that, and then we held it pretty nicely. We never closed back below there. And then, we had a new macro open up at 9:50. And then we had some 10 a.m. red folder news on the NASDAQ, which I was anticipating to send us higher. However, what I ended up doing was moving my stop loss, because I was trailing my stop. Initially, I had my stop loss here, and then I trailed it here, and then I trailed it here below these 3 down close candles. I had my stop loss right here. So you could see it stopped me out barely by a couple points, literally by two points. It stopped me out at 190. The low was 189 essentially. So by 1 point, I got stopped out. And that was just bad management. I had my stop loss a little too high, but this trade did end up going to my full target, which I said was this high here from 8 a.m. So that was essentially what my target was. But because of too aggressive of stop loss placement, I was stopped out. So on this trade, essentially I was targeting about 65 points, 3-to-1 risk to reward, a little higher than a 3-to-1. But again, just moving my stop loss too high, it kind of messed me up on this trade. I still did end up making about $300 on this trade, but I could have definitely, I ended up making $300 on this, but I definitely could have made a little more, about $600 if I didn't get stopped out here by 1 tick. And that was kind of what I was holding towards right at 10 a.m. You can see that the data that came out, the red folder news, gave us the juice that we needed to get into these highs here, which would have essentially took me out for 65 points, which would have been about $650 or so today. But it's all good. It happens. Just got to move on to the next day. That was the only trade I took today. But that was a really good trade. You could have held this much longer and targeted London highs ultimately, which were here for 84 points, though you would have had to hold through some pretty extensive, retracements. But, if you're willing to, you could have definitely caught that. And then from there, we did form a dealing range actually on the day. And I can show you all that and show you another trade opportunity that you could have had today. If you see this from this low to this high, right, this 8 a.m. low down here, we're priced the low of day that we tapped into this 1 hour block, 1 hour buy side imbalance, sell side inefficiency. to this high here at 261. That formed a dealing range because we took out the previous day's high and we took out a 2 p.m. low based off of this price run. So that formed a valid dealing range for us today that you could have used to take another trade. And there was another trade opportunity, but because I was, done for the day, I didn't really want to risk it. So I decided not to take it. So I will outline exactly what that trade opportunity was. Here you have 50% of our dealing range. So mark that here, 50%. And based off of that, you could have taken, you can see again, this was the high here of our dealing range. And this was the low. So the midpoint, which is 50%, is here. This is halfway between that range. Price always seeks to retrace back into the discount of the dealing range. If we're bullish, it wants to retrace back to the discount of the dealing range so that it can continue going higher. And that's a great place to buy. So what I like to do is look for PD arrays that are directly below. If I'm bullish, I like to see PD arrays that are directly below our discount of our dealing range. So as you can see here, we had this 1 minute buy side imbalance, sell side inefficiency form. And so you could have seen every time we retrace back into the dealing range, price did essentially, reverse. So we ended up engineering some liquidity right at the dealing range, at the 50% level. This low here, those became relative equal lows. So the market now was essentially watching. I was essentially watching to see if we could take out these lows and sweep these lows. And if you look at the S&P as well, let's go back to this chart. If we look at the S&P, you can see that actually we SMT'd. You can see that we formed an SMT here at that same time. So let's go to that same area that I was looking at, and let's look at it on S&P. So you see this is the same low. This 11:45 a.m. low on the NASDAQ is the same low here on this middle screen. That's the S&P. So you can see that low formed here. And then we had this low form here at 1210 on the NASDAQ. This 1210 low here on the S&P was much higher. And then you can see here this 1236, 1235 low. You can see that low swept these two lows, right? These relative equal lows on the NASDAQ on the right screen. You can see this 1235 low took out those lows, while the S&P at 1235 was significantly higher. We weren't anywhere near these lows. So that told me the S&P was definitely going to keep going higher. So a great entry on this trade would have been either taking this inversion here. So this buy side and sell side imbalance, buy side inefficiency was inverted here. So you could have entered on this trade, once we got above there. Or what I prefer is taking this order block entry here. These down close candles essentially become an order block, especially on the 2 minute time frame. You could have seen we retested that here at 1243, and that essentially served as a support to send us higher into our next targets, which ultimately could have been this high here, and then eventually would have been the high from, what high is this? November 13th at 268. So 268 could have been a great target on this trade. You would have had to hold through a lot of, retracements, but that's why you should never be trading anything that's going to have you emotional, which was a big reason I started trading micros. I'm no longer really trading minis anymore. It's much easier. I found trading 5 micros than 1 mini. Just because it's much easier to hold through the drawdowns and retracements rather than 1 mini. I found that it makes me much more emotional, and I don't really want to be trading emotionally. So again, $300 on the day. It definitely should have been a little bit more like, 600, but it's all good. It's a part of the game. Days aren't what, makes or break this game. It's about consistency over the weeks, over the months, and the years. Days are completely irrelevant, but what are you doing day in and day out? So I'm going to evaluate this, journal it, and ultimately, try to be better but you can see the entry and execution was pretty great for the most part. Just got to work on managing my stop loss movement, and I'll be better next time. So that was today's trade. I hope y'all got something from this. Again, I might have said a lot of things you might not be familiar with. So I highly recommend, if you haven't heard of any of these concepts, to do some research on ICT trading concepts. That's essentially what I'm trading, and I think that's the best way to trade. So a lot of my videos are going to be discussing a lot of these terms and things that ICT developed. So definitely search ICT trading concepts on YouTube, do some research on that. That's all I got for y'all today. I will see y'all in the next one.